Economists are divided on how the Reserve Bank will tackle stubborn inflation. Some are predicting rate rises, but others say that's not the answer after Australian disposable income suffered the world's sharpest decline last year. For more, we're joined live now by Chief Economist at Macro Business, Leith Van Olselen. Leith, good to see you. What were your takeaways from yesterday's RBA decision to hold the rate at 4.35%?
Look, to be honest, Mike, it was expected. The Reserve Bank's taken a really sensible, neutral position on interest rates. So it is concerned about inflation, but it's also concerned about ultra-weak consumer spending. So therefore, the RBA has basically said that it's going to wait for upcoming data to form a view on whether it should hike interest rates or cut interest rates. And the next key data points to look out for, Mike, is next week's Q1 wage price index data from the ABS, as well as next week's March labour force data. They'll give us a good read on, potentially where interest rates might go.
Some of your colleagues are now saying our stubborn inflation will lead to rate rises rather than continue those holds. What's your tip?
Look, I honestly think the Reserve Bank's going to remain on hold for a while before cutting rates late this year or early next. Look, household consumption's incredibly weak, and that is the main driver of the economy. Data released this week by the Australian Bureau of Statistics showed that real per capita retail sales have fallen by around 6% since mid-2022. The jobs market's also weakening fast, despite what the official data says. Data released today by SEEK showed that the number of applicants per job ad soared nearly 60% above pre-pandemic levels. And what that tells you, Mike, it means that there are way more workers seeking fewer jobs and that the unemployment rate's going to rise.
Yeah, just on that, Michelle Bullock said that Australia's record high immigration isn't having a major impact on inflation. Do you agree?
Yeah, look, it's a bit of a funny one there. The governor said that the strong immigration is driving up housing inflation, most notably rents, but that it's also dampening wage growth. Now, using the governor's logic, that means that record immigration is an absolute disaster for working Australians, because what it basically means is that their wages are being lowered while at the same time their cost of living is being pushed through the roof, for example, through rents. Now, anybody trying to buy or rent a home in Australia can see that the current immigration levels are highly inflationary. It's plain to see.
Yes, I think we're all waiting to see and hoping for a rate reduction soon. Leith, thank you very much for your time. Good to see you.